under the IFRS 9 financial instruments. Now, what the heck is financial instrument? Very simple. Any transaction that results into a party recognizing financial asset and another party recognizing equity or financial liability is a financial instrument. Okay, so financial instrument arises in any transaction where a party recognizes an asset, recognizes a financial asset, and another party recognizes an equity or financial liability. An equity or financial liability. Any transaction at all. And we're going to be looking at some of these transactions in a moment, or some of these transactions in a moment for you to understand what is going on. It means that off the bed, we can classify financial instruments into two categories depending on where the heck we are coming from. So we could have financial assets on one side, and we could have financial liability, and or equity on the other side. Please stay with me carefully. Now, how do we know? Because it's a transaction. So one party is going to be recognizing a financial asset. The other party will be recognizing an equity or financial liability. So how do we know that in the books of the company that we are preparing the financial statement, we have to recognize a financial asset, recognize a financial liability, or recognize an equity instrument? How do we know where exactly we are at? How do we know? It all boils down to the terminology that the examiner uses. This is where the journey starts. So if the entity, we recognize financial assets, if the entity acquires, so in the question we are told that the entity acquires, or the entity bought, or the entity purchases, or the entity invests. So if the entity in question is acquiring, it's buying, it's purchasing, it's the one making the investment, then we will recognize a financial asset. The reverse is true. If it happens that we are preparing a financial statement, the examiner says the entity issued, the entity sold, the entity raised finance. If it happens that we see words like this, issued, sold, raised finance, then we may be looking at a financial liability or an equity instrument. So, Nhyira, I don't know if it is an asset. No. What is the company doing? So before you ask any question, read the question. What is the company doing? Is the company issuing or purchasing? Is the company investing or selling? Is the company raising finance or investing? That is clearly stated in every question that involves financial instrument. No miracles, no gimmicks, no nothing. So off the bat, you must know which terminology applies to what. But if the other party can recognize financial liability or equity instrument, how then do we know that, okay, this is a financial liability or this is an equity instrument? To determine whether a financial instrument is a financial liability or equity instrument, there is a key question that we ask, and the answer to that question will determine whether it is a financial liability or an equity instrument. So to determine if a financial instrument is a financial instrument is an equity or financial liability or financial liability, this question must be answered. So what is the question? Very simple. Does the entity have an obligation to repay? Does the entity have an obligation to repay or redeem the instrument That is the question we ask ourselves. The company that we have in question, does the company have an obligation to repay or redeem the instrument? Two answers can come up. Yes, we have an obligation to repay. No, we have no obligation to pay. If the answer is yes, the entity has an obligation to repay, then it is a financial liability. If the entity has an obligation to repay, then it is a financial liability. Then it is a financial liability. But if the entity has no obligation to repay, then we will recognize an equity instrument. We will recognize an equity instrument. So how